Learning is the key to successful investing, and who doesn't want to invest in some way?
Here at L.E.A.R.N Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.
All right. Hey, everybody. So today we're going to be talking about the stocks to watch, or the stocks on the watch list that we have here at Learn, Grow, Invest for the remainder of the year. Now, I'm supposed to have a special guest joining me for this episode. He's on his way, so we should probably see him shortly. Whenever he goes backstage, I figure he will just let me know. And so I'm actually realizing that I did not send him the link. So I'm going to send him the link now, and he'll join us in a few moments. It's a whole-time guest of the show. So I know that taking stock is still going on. And so, yeah, I know some persons will come over after that is finished. Okay, so he says he'll be on in 15 minutes. All right, so let me just send the link to him so he can join us when he's ready. All right, so how we typically do our stocks to watch for those who are new. So we typically talk about stocks that we're interested in seeing either movements or some activity or some milestone for a particular period. So it's not forever. We're not watching it forever because, of course, we'd have to keep rehashing the same stocks. We're just looking for something specific, some catalyst of some kind, some movement of some kind, and we just have a discussion around it, right? Typically, it's me, or I'm joined by a couple of guests, and we kind of talk about what we see. Now, I usually do a particular backdrop first, but before I do that, let me actually just say a quick word of prayer before we start. So thank you, Lord, for this day. Thank you for the ability to produce wealth. Lord, we thank you that you give us knowledge, wisdom, and insight to be able to make wise investment decisions. Lord, we thank you for this community, and we give you glory, honor, and praise in Jesus' name. Amen. All right, so so I usually start with what goes into my process, what puts a stock on my watch list, right? So typically for me, I'm looking at a couple of things. I'm looking to see, as I mentioned before, either some movement, some catalyst of some kind, some major milestone or action, right? So for example, I may look to see, well, if a stock, for example, there's a notice out. So for example, in a previous episode that I've mentioned, Sagicor Select Funds. They're not on my watch list this time around, but for them, we know that there was talk about them becoming a unit trust. There was a Supreme Court date that was pending. And so because of that information, would be watching it for a particular period. It might have been on my watch list at the start of the year. And to this point, as I suspected, it takes a little while, right? So it's taken a while for us to hear some progress. I think it's almost a year now since we've heard about this news, and so that's kind of what you see sometimes, where you know that something is coming up. It's a little bit delayed, or it takes longer than the company would have projected, and so you have to kind of bear that in mind as you create your own watch list. Or we may be looking for a company to do something interesting in terms of its revenue. So for example, one of the things I would have been anticipating earlier in the year would be Tropical, right? We know that they were coming up with the APO. We are yet to really understand how much they raised. That was a little bit of a interesting saga, to say the least. First, we had the delays, multiple delays in terms of the offer. Then we had the restatement of their financials, and then we had the two brokers pretty much saying, well, you know, we don't want to be associated with the offer anymore, for lack of a better phrase. And then the company saying that the offer closed, but not really telling us how much it closed by. I think that's the first time I've ever seen a basis of allotment where I read it and I wasn't sure if the offer was fully taken up, fully subscribed, or what. Now, what is interesting is one of the brokers on this for NCB, they would have had a situation where they said to their investors, if you did not respond to them by the offer closes, then they would have automatically done a refund. That I think might have, you know, compromised the offer somewhat. That's a major thing. So I figured the next financial or something, we'll see something to let us know how much they raised. I would imagine if they were able to raise all of the money that they were looking for, they wouldn't be hiding that, or that wouldn't be hard to figure out, right? So, which means that their ability to pay down the debt is still in question, which means their ability to be profitable for the year is going to be in question, which means that they may have to carry the debt for a little while longer. So things like that is an example of what we'd be looking for, right? So things like that, again, if you're new, you want to look to see what happens there, because these are the things that will impact movement of the stock price. These are the things that will impact how investors look forward to trading the company. These are the things that will make you maybe determine, you know, whether or not you've made a good investment decisions or a good investment decision or not, depending on your timeline. Because all of this comes down to know how long you see yourself holding this company, where are you investing for, and so on. All right. So yeah, so I thought I would just, you know, do that. So I didn't want to give any picks until, you know, my guest is here. So I'll probably talk about some other things in the meantime, right? So I have been but when I just switched off taking stock, they were talking about the crypto market. Now this is interesting to see where crypto is. I can't lie. I did know. So this is one of the things I knew coming into this year, right? The markets in general were very bullish with Trump being in the presidency, right? It's been good for stocks. It's been good for crypto. And we're seeing more and more companies buying now. I said this years ago that with crypto, one of the things we will look to see is more institutional buying, more firms, you know, putting capital there. And with that coming, so the thing that I was most concerned about at the time is that persons are saying crypto was supposed to be this thing that, you know, separated you from fiat, right? It was supposed to be the anti-fiat. That's what it started out as at the time. I'm not sure persons are very interested in that anymore. They just care about that, the fact that it's increasing in value. They're not really caring about the function or the practicality of it anymore. I'm buying this thing for 120K. I'm able to sell it for 200K. That's what most persons care about at this point, not necessarily the utility or the functionality of it. That's my perspective. I may be wrong here, but you can let me know what your thoughts are. Either way, as we see more and more institutions come into it, it will drive up the price. What will happen, though, I think, is that, and I'll just say, I've been purchasing cryptocurrency since about 2017. I actually purchased crypto before I purchased stocks. So I've been a crypto investor longer than I've been investing in stocks. I shared that story already. My first crypto portfolio went down 95%. I held, and then it's since recovered, right? So I'm doing well in terms of crypto, can't complain there. Also, I've been doing well in terms of the US markets, which is another thing I wanted to talk about as well. So in the US markets, it's been surpassing everybody's expectations. Now, about 2 years ago, everybody was expecting a recession, right? I don't know if you guys remember this. There were like nobody wanted to say the R word. And so persons were saying, you know, the markets are high, you know, this is the year where everything is going to go south, and we've seen none of that, right? Now, I was watching a YouTuber from the US yesterday who he was saying that he doesn't know when the market is going to go down, but he thinks, you know, that the markets are kind of at some ridiculous highs and it's due for a correction. But I think that that concept of a correction is based on the fact that persons expect. So we've always seen the market do these cycles, right? It goes up, runs up, it has a bit of correction, and then it comes back around every few years. That's actually what I think persons have been waiting for in the Jamaican market as well, where they see that we're in a bear market now, they're waiting for the bull market to come back, right? And I think what's been happening is that persons, this is, you know, my thought, you can let me know what you think here. I think because everybody is expecting the market to do one thing, based on the fact that investors are more knowledgeable, they're doing more research, they're more, you know, determined, convicted, etc., they are going to push against what is supposed to happen. Meaning, if the market is supposed to be in a correction, we've seen it. We've seen maybe 1 or 2 days where there's bad news, markets will go down a little, and everybody thinks, okay, well, this is the thing now that's gonna make the market go into some sort of downturn. Within a day or two, all of that is wiped out, all the losses are recovered, and it's back to where it was headed before. And so there's this idea that, and actually the opposite is true for our market, where stocks have been trending down. Some are down 80%, not calling any names, 80%, 90%, and persons are expecting that there's going to be some catalyst or something to push the markets back up to a recovery, right? So it's this thing where I think it's just going to take a little bit longer for the recovery in Jamaica than everybody expected, and it's going to take a little longer for the correction in the US like everybody is been expecting. I hope I'm making sense to you here, right? So I say that to say persons who are waiting for the US markets to have a downturn, so they're not investing, I don't think is the best approach. Those who are waiting for the Jamaican markets to turn bullish before they start investing, I don't think it's a right approach as well. So we have those two contrasting markets. Both markets present opportunities to buy, in my opinion. I think it's a great thing to own some of these companies at these prices. I remember 2018, 2019, I would have loved to buy some companies at certain prices. Now you have the opportunity to do that. Now, my portfolio is very slim right now, right? I have 3 stocks in my portfolio right now, and I think Renee has 2. Our son has, I remember how much he has in his right now, and we're keeping it very lean, but we see a lot of opportunities in terms of the market, right? So that's a good kind of backstory as to where things are. You know, the highlight of the year so far for me would have been the Trans Jamaica off of a sale. I heard at the AGM that they now have 40,000 investors. That's a ridiculous number. That makes it interesting for me, I think, to see how it will trade, you know, moving forward. But we heard all the things that we needed to hear at the AGM. I'm not going to talk about it tonight. Watch the AGM if you're interested. So I think our guest is about ready to join. So, all right, let me see, you know, what you guys are saying until Garfield, are you asking me a question or making a statement? You're asking me if RPL is a good investment, or are you telling me that RPL is a good investment? Let me know. Yes, Tavares, somebody did say RPL. Cygnus is what you're watching. Humble Boss, why are you watching it? What's JetCon? What is a JetCon? Let me know. Too much secrecy with Tropical. I mean, it's not a pleasant situation to be in. I know the company might have been disappointed with how it was handled. I really thought that the right thing to do would have been to extend the closure, have an investor briefing, explain to investors what's happening, why the restatement had to happen, assure them of what's happening. And I thought that would have brought more confidence back to the company, but we'll. So we also have Diplomat saying Dolphin Cove, NCV, Fontana, and Kingston Properties. Wow, I will not comment on that, sir. Mr. Verway, are you ready to go? Thumbs up if you're ready, sir. Okay. All right, tilt your camera down a little bit. Okay. All right, everyone. Join me in welcoming. Is it Dr. Verway by now?
No, it is not.
Okay. Can you turn your phone sideways, please, so that it fills in sides? I don't know if you have a stand.
It's not a stand.
Yeah, but so you said the fact that your video is cut off to the sides. Can you?
Oh, okay.
Yeah, because we're gonna be doing clips and.
Let me see. I can make this. No, that's definitely not gonna work.
Yeah,
I don't know why.
Presentation. I can't walk you through it while I'm live, but you can do it. I don't know if you want to try it and then jump back
I'll
in.
figure it out. Okay. Yeah, let me do that.
All right. But Tropical is still trading above APO, so investors shouldn't feel bad. Well, when you say shouldn't feel bad, I don't know what you mean here. So that situation, I think, is going to have an impact for a while, right? I won't get into it now. JetCon's price has apparently moved significantly during the past few months, turnaround since selling new cars. Okay. I'll leave it at that. I mean, I don't know if that'll be sustained, but we'll see. I may be wrong. My boss is asking, am I holding cash for opportunities on the JSE? Nope. All my funds are invested now. Not holding any bit of cash at all. I'm fully invested. 100% invested. All right. Let's try this again. Oh boy.
I'm still not there.
Let's
Hold on, I know what I'm gonna do. I'm actually gonna change my change devices completely.
Yes. Thank you.
That would be I'll come in with my tablet instead of because my camera, I can't find it actually. I haven't used it in so long. So
what
it's
happened?
definitely not. My laptop camera is terrible. It's terrible. And also the laptop is also slanted. But no man, the tablet's gonna work perfectly.
Okay. All right, cool. All right, so an impact on a company isn't the same as impact on the share price. As long as the share price are still good, investors should be good. Okay, Mr. Donaldson, I'll leave you to that. I'll leave you to that. I think the two are related, but hey, you would know better than I would. All right, so let me go through. Let me get my screen ready to share as we talk about some stocks here. Let me know if you have any questions as we're going through, by the way. I'd love to take some questions as we do this. And let me know which stocks are on your watch list, guys. Let me know. Let me put up that slide, but which stocks are on your watch list now? Let me know which stocks are on your watch list. All right. So tell me which stocks are on your watch list. I'm checking over IG as well. Let me know which stocks are on your watch list for those joining on IG. All right. So I've seen a few. Well, Diplomat has shared. Limitless. Are you saying Trans Jamaica is your pick? I'm not. This is not clear. Let me know. So we've gotten Cygnus, we've gotten Dolphin Cove, NCB, Fontana, and Kingston Properties. That's it so far. What I will say, read Dolphin Cove. I think they will likely announce another dividend. I'm not too intrigued by the company anymore, honestly. So I've stopped watching it. So not intrigued anymore. I was pegging them for a good dividend company. I don't know if I still feel the same way. So it's off my watch list officially. Kurt Gibson says VM. Is that VMIL? VMIL that just went below IPO price recently. That's at $1.94 now. I mean, it's down 23% year to date. That was, I mean, I know stocks for some have sentimental value. This one has sentimental value for me, even though I sold a while back. But this is very surprising to see, right? This stock was as high as $13, right? This was as high as $13. So to see it at $1.94, where an IPO was $2.33, I won't say anything about Kintyre. Lastly, I'm with you for that one. All right, let's try this one again. Remove that. Hide that. Thank you. So, that camera is really not good. Okay. Welcome, Chike. How are you?
I'm good, bro.
It's been a couple of years. Been a long time. Been a long. Do you still invest, sir? Do you still invest in the markets?
Very, very possibly no. But
Okay.
I'm still here. I'm still actively watching my portfolio of both equity and crypto, both local and abroad. An investor doesn't have to be in the market every single day, but he still has to pay attention. She has to pay attention to their portfolio, right? So I still know how it's performing. I still know what I have inside there, what's doing good, what's not doing good, you know. So yeah.
All right. So walk us through your process, because it's been a while. Some persons may not be familiar with you. What's your process for selecting a company, right? So what would put a company on your watch list? What are you looking for? Do you use screeners? Do you go to Excel to look at the financials? What's your process like?
All right. So good night again for everybody. For those who don't know me, I am the quantitative side of the qualitative of German of itself. I say it that way. I deal with the numbers. So my process actually has to do with how a company looks on the financials, for sure. I like companies that if we break it down when we come to, and we're looking at equity now, so equity being stocks, I like companies that have good cash flow. They have a solid income statement in terms of they're they're doing year on year either stable income in terms of net income or they're doing profits. But for me, I like the long-term trajectory. So when I purchase a company, I'm investing in it for at least a minimum of 3 years in terms of how I'm looking at it. Not looking to really trade. If I need to trade, there are other methods that I could use. So definitely once I'm dealing with a company of itself, it's going in for at least 3 years that I'm willing to step into the company at whatever point in time I'm stepping into. If I don't get the number of units I want, I'll keep buying until I get the amount that I want up to that period. but I do a periodic review every single year on the company to see where it's at. And also, if I need to have a taking of some profit, I will also do so in terms of taking money out. No, many might ask the question, but if you're waiting for a company for 3 years, you could be in an extensive loss. And the reason why I'm normally, yes, there are times when the companies that I invest in do go down for various reasons. It could be the economy, it could be something that happened with the executive themselves, the primary person who is the founder, etc. But at the same time, I always step into a company, and Jeremy knows this about me, that I step into a company only when I feel that the price is somewhat either very close to or at a discount for me to step into it, right? So there's more runway for it to go up more than it goes down accordingly. And that's been a hard learned lesson over the years, based on just investments I made before. And I'm a little more rigid in when I step into a company now, there is there is room for growth. There's always room for growth accordingly because the company, the first thing I really do look on is a solid cash base. I'm not really going to be paying immediate attention to, oh, the company has a lot of profits and the company is doing worse. Worse, I'm not really a startup person. I've never been a startup person just because they have a high level of cash burn at the start. Takes them a while to get their trajectory. They really have to have a good product. But if I am aware of the person who's doing the startup, then I'm a little bit more swayed accordingly because now I know on the qualitative side, there's a personal relationship there as to why I would want to stick around and see, where it's going to go accordingly. So yeah, that's my process. In a summary, cash, I'm looking for cash. So I'm looking at your cash flow statements. And then I'm looking on your income statements. While revenue doesn't necessarily have to be growing like that every single year on year, things happen. But your expenses need to be managed. I really, really zero in on expenses and how those are being managed.
Okay, so a lot of things I want to say based on what you just said, right? So no startups, meaning no junior market companies, are just those who are in startup stage. And how do you classify a startup? Is it a certain revenue target? Is it stage of the company? Is it level of maturity? How are you classifying a startup?
Well, definitely for startup is it's gonna be stage of the company, more than level of maturity. Because the truth is, there could be companies that you would consider startup, but the way how they operate. Um, for instance, when you look on them from a qualitative side, they have a clear product, they have a clear, viable product that they know their target market. There is a founder or founders that have clear objectives as to what they plan to do year one, year two to year five, etc. And they display a level of maturity that you would see or expect from a company that is going out there to grow their product or service, what they're putting to the market. Companies was all over the place that we have seen where they're mature, but yet they move away from what is their core business. So for me, when it comes to startups of itself, it's about the stage that they're at. So they're in their infancy. They're literally only year one to year five, accordingly for me, coming coming in general, or they could be coming to the market as well too. So it could be an IPO coming to the market. So they're in year one to year five for me in the startup. That's how I would consider them a startup accordingly. After year five is done, then I start looking at you a bit differently. I don't consider you a startup anymore. because you've
Okay.
got
Year 5 on the market, year 5 listed, or year 5 in the company's inception?
for me normally it's year 5 from the company's inception, but I've had to be a little bit more
I don't
flexible
know.
with
I don't think I've seen any companies listed that are under 5 years old though.
that too. So I've literally had to, bend the rule a little bit when we deal with the IPOs accordingly. And I would say then year 5 is that we have when you start to see things needing to be paid to the government accordingly, taxes, etc. and so
Yeah.
forth. There are all of the niceties that they had, that runway by joining the JSE, that tax break runway, etc. And all of the other areas that they get the benefits for start to now be removed a little bit because
Yeah.
they're supposed to be on that trajectory that, yeah, man, you might not be at the top level as yet, clearly, but at least you're still up. You're still going up, or you're still you have a clear path. That when I look on your financials and your performance, it shows that you are still sticking to what you came to market with based on your prospectus in terms of what you said you were going to do.
Okay. Well, I'm not necessarily holding them to their prospectus all the time because it's okay to pivot, in my opinion. The pivot just has to make sense, right? So, for example, one-on-one pivoted, that made sense. We're seeing the results of that. Other companies have pivoted and it has not made sense. So to me, a pivot has to make sense, right? The next thing I'll ask you about it before getting to the watch list is what's the makeup of your portfolio? Because I remember what it used to be.
Yeah.
I know you're local. You'd have to tell me the individual companies, but tell me maybe percentages of overall portfolio. So stocks, real estate, or US stocks or crypto. Because I know for a while you were heavy on crypto. So
I
you
am,
probably
I am
like
still.
20
Yeah, I
Bitcoin
am.
in your portfolio right now.
Yeah, I have. No, I'm not. If I was, we'd be having a different conversation.
Okay.
Should I have been holding Bitcoin in any kind of way? Actually, on that note, though, I am kicking myself on a particular equity that I recently saw their
Local
stock
or
price.
US?
US based. That was Netflix actually, because I remember when Netflix when I was really convicted. And then again, at the time, I really didn't have the money, but I was convicted about Netflix's turnaround when they were about to move away from rentals and sending it to your house to streaming. And at the time, I think that price was like about 150, 200, if so much. And I looked at Netflix's share price today and I saw 1,198, and I was just like, oh,
That's
in
what?
hindsight,
1,000%.
yeah, in
That's
hindsight,
about 600, 700%.
yeah, man, in
I mean,
hindsight,
so here's the thing. I don't do that anymore. I don't, because to me, it's no, it's always opportunity cost. So once
yeah.
I'm happy with my investment, I don't say, well, I could have gotten that, or that train missed me. I don't worry about that stuff anymore because I've made, and I was saying to somebody today that I've made more in investments than I've made from my salaries in the last
Right.
8 years since I've started. So to me, that's good return. Um, and so I'm doing what it's supposed to do, right? My investments are doing what it's supposed to do. I don't get every opportunity. I don't get all the stocks right before they go up. I've missed some. That's okay to me, but I have a good return on what I've invested. I've gotten good income. I'm sorry I never tracked all my dividends, because if I was tracking it from the start, I'm sure I've probably gotten
Mhm.
to maybe like 2 million or more, for example, in dividends by now. Probably more, I don't know, because I haven't been tracking it. Some years I track it, some years I don't. And so to me, it's paid for itself. The investment of time to do research, selecting stocks, I'm better off because I'm an investor. So if I miss something, that's okay. I got into Nvidia when when I thought it was late, right after the split, and it's up 50% since the split. So I mean, it's fine.
As a matter of fact, it's the same for me and Amazon actually when I got into it. So I mean, and I'm up nicely. So I'm up 86%. If I checked it, I was up 86%. So I
Yeah,
mean,
man.
you're right about that actually. I mean, I don't look at it in height. I don't look at it. It was just that it came to me today. When it came to me today, I was just like,
Because you're going to miss on all the great investors I see have missed something. There's something that you miss, you can look at and say, well, I should have done this or I could have done that. I mean, that's normal, right? So you can go first. You're our guest here. What's on your watch list and why?
all right. So seeing
What?
that we have Follow Blue and stuff, I'm actually, even though this is educational, I'm going to literally give fair disclosure that anything that I'm actually going to say is more than likely in my portfolio as well too.
Oh,
So
okay. Hold on. We're going back to disclaimers. Are you worried about an article, sir? You don't want to say an article come out
no, no,
tomorrow
no, I'm not
about
worried about any articles or anything like that. I'm just
tanking
doing
stock price,
I'm
sir?
just doing it because just because like yeah, you know.
Okay, fair enough. Let me put up my disclaimer as well. Let me find it here. There we go. Okay, go ahead.
So you actually called the first company you called the company that is a part of my local portfolio a short while ago. And true to the pivots. Well, you say pivot, but to me, I don't think they really moved away from the core function, and that is actually one-on-one. I've had one-on-one from inception in terms of from IPO. I've held.
Have you averaged down?
Yes, I have. Yes,
Okay.
I do. Comfortable with it accordingly. And just because number one, I was aware of where this was, what was the plan for the, and when I say aware, I mean as in following and understanding what the plan was for the company when it was coming out accordingly. And was also very impressed by the founder, by Ricardo, in terms of his dedication to what he wanted the company to do, what its core focus was to be in terms of how they would provide education accordingly. And he's weathered multiple storms. He's had COVID would have been the best bellwether situation in terms of you know having one-on-one really take advantage of the stream, well, being able to put their product of classroom in a box, accordingly in the schools, etc., when everybody had to be home. But he went on further from there, and I think in my opinion, it might be yet to materialize, but it's a beautiful thing to see once it clicks together. You and me, Jermaine, you know me about my view on AI, that I am, as much as it's whatever it is, I am all in on it. And Ricardo has always been behind AI from inception. He was an early adopter in terms of pushing it out, having it be a core focus and function part of the products and services of one-on-one. So I look forward to seeing what it's Luna, right? Yeah, Luna, right? I don't want to butch it.
Yeah, yeah.
Right. Um, in terms of especially where we're at right now with the various AI models, it's awesome to see that Luna is a product that is coming out of the Caribbean, and Jamaica as such too. So for me, I'm excited to see when that catches fire properly as to where it propels the company, because you've got multiple large language models. But a very big issue is that you don't have these models being done specifically for the Caribbean, etc. And with Ricardo, with one-on-one, we get specifically now to the company and the product. With one-on-one, having a dedicated AI model that is for the Caribbean, that is for the children and adults that are learning curriculum based on the Caribbean, etc. I think that's a heavy positive. So I look forward to seeing what they're gonna do. Now, if that's the qualitative side, right? Happy that you have the quantitative part of. Now, stock price. I don't really look on that. It goes down, it goes up. It's about what the company does. As long as what the company was sticking to for core and for what their objective was remains the same, I'm still riding with you to the end on that. Now, what I love is that, and I don't really like to do quarters. As a matter of fact, I don't like to do quarters. So let me actually make that clear. That those who know me know I don't like to do quarters, and I normally like to look on things in a whole year. But I cannot discount where Ricardo is coming from, and one-on-one, I should say, is coming from. That this has been a phenomenal quarter performance for them and a wonderful turnaround from negative to positive with respect to the 6 month trajectory. As you can see, you don't have the top part there, but this 0.009 in a negative to a 0.029 in earnings per unit, per stock unit. That's a solid. It bodes well. It bodes well for what they've been doing, starting to catch fire in this current trajectory of their next period of moving forward, right? Their next set of years accordingly. And I can only look forward excitingly to see what they have. So it's in my portfolio. I hold fast it accordingly, because I believe in what Ricardo and his team are doing accordingly with this. And I believe that they're on the cusp of picking the technologies that really are going to benefit the Caribbean accordingly. So this is my first pick accordingly and part of my book.
Okay. All right. So I'm with you in that I see some upside here as well. I actually think they are behind in terms of where they could have been. I get their focus, meaning they're focused a lot on government, and I understand why, meaning the relationships have been building and are strongest with governments. So it's the government of Barbados, it's the government of Jamaica, Classroom in a Box has been growing. It makes sense to leverage that, right, and build a foundation there. I see this company being able to do so. Certainly doing 55 million in 9 months is very good. So I wouldn't be surprised if they're doing in a year or two 100 million per year in profits, right? That's completely feasible for them. I am concerned about the fact that so much of their business is from government though. And that's just my perception of government, meaning I don't know if elections come, there's a change of administration, does that pose any risk for them? And the technology is solid. I don't know if they've even fully explored or leveraged the content studio side of things. That's opportunity there as well. I thought when they were they had like a one for professionals or one for, they had a model that I was very interested in, that I looked into possibly having Learn, Grow, Invest leverage the technology as well when it just came out, but it seemed like they kind of moved away from that, which is fine, right? But I think the corporate pie is bigger than the government pie. Now, government is a little bit more secure, and this is known in if you don't do business with government, then you may not understand this. But with government, the thought process is always is not that they won't pay you, they just may take a while. So
Right.
that's why we usually see the companies that work with government have high receivables, because it's not going to be 30 days. You're not going to get paid in 30 days. You may get paid in 90 days or 120 days, but you can pretty much book those revenues, and the government has kind of recovered or redeemed their reputation for being an entity that doesn't pay. Back 10-15 years ago, government was notorious for not necessarily paying bills on time, or being a reliable client. Because I remember when I was at Microsoft, a lot of work was being done to just kind of manage the tension between Microsoft and the government at the time. That's completely in a different shape right now. So I'm on board here, like the company as well. I just think they could actually be bigger. I think they have a bigger opportunity than they're taking advantage of. I understand the strategy. I know why it makes sense, but I just think that they could be doing a lot better because they have something that can serve. So the platform we're on now for our community, that could have been one-on-one. That could have been their platform. But I don't think they're necessarily focusing on, for example, something for our audience right now. They may very well do so in the future. So just say, they're in good shape. I think that the technology, as I said, is solid. Again, it's not in my portfolio right now, but who knows? One day that may change.
Well,
All right.
let me add on one quick thing though. So the one thing I'd look on is, if you remember when and every annual report that they have, I would pay attention to their exposure countrywide and the announcements of which governments they're tied into.
Yeah.
For me, I've always I always have the concern of how much of a spread you are tied to just one location, right? So admittedly, I haven't looked on what would have been their last year's report, or should I say the last annual report, to see how that spread would have changed. Because their annual reports are always very, very informative. They
I think,
don't skimp on information.
I think it's mostly the same. It's mostly the
Right.
same.
So if it hasn't really changed and they still have that spread between Jamaica, Bahamas, etc., and the fact that they're going into other Caribbean countries, and we know with clarity that the market that 101 is targeting, they are trying to saturate the Caribbean market. They see a deficiency in teaching and schooling for the Caribbean in the Caribbean. That has been Ricardo's passion accordingly, right? So additionally too, I mean, we had COVID and we were looking and thinking of, both of us, I would say, we expected. I'm there with you in thinking that the company, there's potential that it could have been further along.
Okay.
But the way how they have done things, it has been very measured and very, I would want to say, strategic. So they're not trying to jump into a multiple number of wheelhouses and then they're basically skimmed thin, right? Then they seem to know exactly where they want to stay, what they want to be in. If it stops working for them, they slowly start to move out from it. And I would say maybe that's evident of, when they had to pivot accordingly, what they had to focus on, still within the educational realm. We have been experiencing the losses that as shareholders we had to bear at the time, but it's paying off, and that's the thing of a true. Well, I don't want to say truth. No, take that back. That is the thing of a investor that is going for the long haul. You normally ride the company. You have a balanced portfolio. You have a portfolio that balances out, that you ride with the company for the ups and downs. Because again, you never really know when it truly catches a fire per se. It can pop off today, and the person that enters in here, you get 50, 100%. But then based on when you bought in and what your, as you asked me earlier, you say average down. By the time it really catches a fire, right, and just starts to run, you take off a little off the top, and you still have a lot more trajectory to go because it's still got so much more because of your entry level. When it was going down, you were entering, you still kept buying because of your belief, because of what you saw as you bought into the vision,
Yeah.
right? So I think that's about it on that. Once everything has stayed the same with respect to their spread, with respect to their exposure, and it's to give them chance. And I'm gonna catch to the messages and just thanks Humbus for the correction. It's Uno, not Luno. Yes, yeah,
Yeah,
Taylor
man.
did that.
When you said it, I heard it as like I think Luna is something else, but and also try and I saw the comment on the last video. Trying is referring to, so on their balance sheet, there's a deferred income that's under
Oh,
their current
52, it's
liability.
52 million. Yeah, I think it's 52 million. If you pull it up, I saw that. What?
Yeah. Yeah.
So
So for those who don't understand what deferred income is essentially revenue that's recognized on the P&L, but it's like it's booked for services not yet delivered, right?
right.
So what this may mean is that, for example, to me, it depends on what the service is. Now, I don't think that explained it. Did they explain it in the document? Do they have notes?
Should be the notes if you're gonna find it in the notes.
I don't think it was so what I'll do, I will send Ricardo a message asking about it, and then we'll probably cover it in a later video, right? Because it just depends on what the impact is going to be. Now, I understand what this may be. For example, it's similar to, like, for example, when I do coaching for somebody, right? I have a client who I coach. I pretty much I'm packaging a number of hours and say, okay, I'm gonna coach you, Chike, for 10 hours, and we start now. We may book the 10 hours as revenue, but I now need to deliver that, right? I now need to deliver that service to you. So it's a prepayment, it's a liability for the company, because the customer has paid for something they have not yet received, because the hours need to be delivered, the service needs to be delivered, need to be delivered. So it should certainly be considered. So thanks for raising it again, Tryon. So yeah, I'll talk to Ricardo about it, get some context as to what it will mean, and then we can comment on it for another video. All right. All right.
So hold on a second. Actually, I'll address it, because it's in the statement of, under the director's report to shareholders, statement of financial position summary.
Tell me the page.
It is on page. What page is this now? It's the pages at the top. Well,
Okay,
for me, it says page 3. It says page 4 for me on my PDF reader. I don't see the page on the actual report. So that's
okay, no man, I have it. I have it on the screen. So it says, I'll read that entire section. So total assets grew to 707 million at the end of the 9-month period, reflecting a 12.5% increase from 628 million in the prior year. This growth was predominantly driven by our continued investment in non-current assets, particularly the expansion and enhancement of intangible assets that underpin our core revenue generating capabilities, i.e. their software and digital infrastructure. Total equity also increased, rising to 460 million, up from 386 year over year, reflecting the positive impact of improved earnings. As a result, the company successfully transitioned from an accumulated deficit of 27 million to accumulated surplus, which is a sum of 46 million, signaling meaningful progress in restoring long-term shareholder value. Total liabilities increased by 32.5%, largely due to higher levels of deferred income associated with annual billing of subscription services. This growth in deferred revenue is aligned with our business model and reflects forward visibility on cash inflows and sustained customer engagement.
There we go. Yep. So something to look at for sure, because you want to see that definitely coming down, because it's on the liability side accordingly. But
I mean, it's like when with engagement with the client, this what this is saying is that, so they're going to be providing the service, for example, classroom in a box. Maybe you pay for 12 months. So you come on board as a client. Now you're paying maybe from July 2025 to June 2026. So again, you sign on now. We may book the revenues for the year, but you're pretty much paying that monthly. That's my understanding of it. I'll speak to Ricardo and see if I'm on track there, but that's what I'm getting from this. The risk in that that I may see is, for example, a customer may cancel a subscription.
Exactly.
Right? So you may cancel, and then now you have to restate, or you have to say, well, we lost some of that projected revenue. So that is something to look out for. But again, it just depends on the nature of the contract and the client, etc. All right.
Yep.
All right. So how much time do you have, Cheeky? Because I think you say you have a hard stop 10.
No, I'm good.
Okay. Because I know it's almost your bedtime,
When we get involved in this, I normally, I get excited and
Yeah, I know.
energy is gone. So we can give them. I would like to give them what they came to.
Okay. All right. So let me go next then. All right. So there's one I wanted to share, but I changed my mind about it. So hold on.
You're not doing the one that is.
No. So I wanted to. So let me do my disclaimer here. In light of recent events, right? So my one here is actually Image Plus, right? Now we Learn, Grow, Invest Limited, which is a company that I own. We do business with Image Plus, right? So I'm not a shareholder. As at the point of this video, we have a policy actually where we don't purchase, Renee and myself, we don't purchase stocks in companies we do business with on an ongoing basis. So with Image Plus, we've been doing earnings calls for them for like the last 3 years. We support them on their AGM, and so we haven't found a balance where we can find a way to properly shield ourselves from any risk of literally what came out in the article about us, influencing stock price because of our own benefit, right? This is something that we came up with years ago. Once we saw where there was a viable investor relations business, I've just said, well, once we do business with the company more than one quarter, we're not going to own shares. So we haven't been Image Plus shareholders for a while, because for us, the acquisition that is being talked about now, they've been saying it on earnings calls for like the last 6 months, right? So it's not new information, but I can certainly have it on my watch list, right? There's no issue with that. So and this is something we speak to companies about, by the way. Whenever we work with them, we assure them that, look, our current policies that we don't trade your shares if we're building your reports, doing your earnings calls, etc. Now the obvious question is, and I'll address the elephant in the room. Somebody asked me once, what if a company like RPL, for example, is doing really well? How will you feel? I said, well, it's a trade-off we have to make. It's something that is our current policy. Our board agrees. We have a board of directors. They said just stay away. And so until we have a revised policy, then that will be the case. So I had to state that for Image Plus. Don't want to see any articles coming out to say, there's conflict of interest. But I really like the acquisition for them. So before even the acquisition, I thought that they've been, you notice the price has been kind of trending down.
Downward, yeah.
So they started here at 154, so it's down 43% year to date, right? So to me, the market is not looking at, because the company's revenues only dipped slightly coming in from last year. They did have some downtime in the recent year. That has been resolved. They have their systems in place to manage that. They've been, introducing new modalities. Acquisitions are in train. Then the new location is in train as well. So a lot of things to me are pointing to the company's favor. Now, I think this is my stocks to watch for H2, but for them, I'm giving them up to a year, because I think once the location is finished, then majority of their expenses are gonna drop significantly, because you have to spend money to develop the location, put in fixtures, hire new staff, etc. Once that is out the way, they'll be able to realize more in profits going forward. And I'm waiting to see the impact of the acquisitions for them, the Woman's Place. I'm assuming it's a small company, but it seems to have a very specific client base. I want to say small comparatively. They're doing $1 billion in revenues. I don't know how much the Woman's Place is doing, but I'm assuming it's not $1 billion. We're waiting to see. But let's say it's a company maybe doing 100, 200. I'm not sure, right? The interesting thing about the acquisitions, we don't typically know how much it's going to be accretive until the quarters come, right? So that's the one for me. I don't know if there's anything else that I'll say. And I do think that there's certainly upside to be gained from where it is here. So yeah.
So from the I don't know much about them. I know you've spoken of, but I mean, stock price. I zoomed out. If you zoom and you zoomed out just now, so you go 6 months, you go year to date.
Yeah.
Within reason, coming from okay, so we've had some big volumes that have been taken up, right? And the stock has been, I would want to say from what was that? Hold on, don't move too far. 20 from March. Was it March? March. If we go from March, it technically April. So it technically tapered off and has literally been bouncing around for the most part of March forward at the $1 line accordingly. They've had their reports that had come out, and in my opinion, and this is the uneducated, just looking on it opinion, not necessarily. I mean, they had a revenue dip, right, for that quarter. There was a revenue dip. When you put it up there, you can see that 3 months revenue compared to last year, 293 versus 267. That is on page 7. For them, it's page 6.
Yeah.
And the EPS has dipped by basically 2 cents. But the truth is, that's normal, especially for what they're going through as well too with the investment that they put down accordingly. They're still in a surplus. I think when you look on their equity changes, it's still in accumulated surplus. And as a matter of fact, it grew from basically, I would round it off at 600,000 in the same period last year to 630 this year. So that's page 7, right? The part that I like the most, cash flow. Cash flow, without question, they end that period with a positive cash flow of a lot more money, $61 million, versus the same period last year, negative 16 million. Right? So, and if you look specifically now on cash generated during operations, which is very important, it's basically ballooned. Like, this is literally more than double, right? Not just for the audited year end, but just for the period before that, it was a full negative 46 million, plus. And they've moved that to 161 million positive. Right. So that's this company has lifeblood. Cash flow is the lifeblood of a company. And cash flow from its operations are extremely important as well too. So looking
Yes,
on
I think the dip for them is partly due to the shift that the government has made in terms of where they direct the clients to do scans, right? So they had this major contract. Government is essentially trying to do more of it in-house. They spoke about it at the AGM, I believe, where it's something that they still see an opportunity for, but the nature of the partnership will look different, right? So they believe that clients will still, find their way to come and do business with them. It's just now the client is paying and not necessarily the government anymore. It's not government subsidized, right? So that, I think, would have explained some of the short versus where they were last year. But with like the launch of different modalities, machines now back, in full swing, I think they'll make up for it throughout the year, because this is their first quarter. So they're their financial year starts, I believe March, April, May. Yeah, March. So I think that they'll be fine, right?
I have to agree with you based on where they're coming from to where to this now according. And more important, not more important, but I had a I had a very recent, not with Image Plus or with what they do, but imaging of itself. Particular procedure or check that I need to do. And it's
Yeah.
very easy for those machines, for machines of that nature, in terms of that needs to be doing scanning and imaging to go down. Because I literally had my appointment set up, and next thing I
All
got a
good.
call that says, "Hey, the machine is down at this location. Can you go to the next location accordingly?" So you have to see. So and that's the thing. I see Omar in the comments, talking about the risk for them is the machine downtime because of parts being sourced abroad. It happens with everybody. It
Every
happens.
business has risk.
Right.
Every
You got
single business
elite,
has risk.
elite IPC. Any one of them that have those type of high resolution, high resonance resolution, type of machines. Yeah, it's the
Yeah.
nature that.
So what I'd say from a customer perspective, I have nothing but rave reviews for Image Plus. I've had a number of scans done there. My mom, my son, my wife, my mother-in-law. I think at one point while she was still with us, their customer service is excellent. It's 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 up like if I was not an investor, I would be probably a lifelong customer, right? And I do think if you notice, especially with coronavirus that happened recently, I think we're gonna see more scans for the population as we get older. I
Yeah,
think the aging population bodes well for more scans. So I think if you and I like what they do in showing their scan count. They're always reporting on scan count. If it was not for the downtime, then all or most of the scan counts would have been higher, right? So I think that in the next 5 years, 10 years, you're going to see those numbers significantly high in terms of scan counts. What I would love to see them do, and I know that it's with this type of business, it takes a lot of infrastructure, right? But I'd
right.
love to see them cover the entire country. I'd love to see them start to market because one of the things I mentioned during IPO is the international services, right? Medical tourism, persons coming in locally to do certain scans. I think that's one of the things they'll be targeting with the new location. So I think they're possibly positioned to be like a hub for what they do for the Caribbean. Now I do know some Caribbean countries may have some of the other services. I'm not really that familiar with the space, but the investment in a new location feels like a potential positioning for a regional push is what I'll say. So we'll see how that shapes up for them.
Yeah. Okay.
All right. So
Yeah.
Omar is saying customer service is very good there. We spoke about this already, the risk of downtime. So here's the thing. Depreciation costs are going to be high as well based on the industry, but to me, you have to take depreciation into context. If I see a company does 15 million in profit and 20 million was depreciation, they really, I mean, it's not going to, I'm not going to treat it the same way as if a company had admin costs of maybe salaries for 20 million and that's why you made 15. To me, it's different because depreciation doesn't impact cash. It's an accounting concept, and that's why, as Chike would say, you focus on the cash flow statement because the cash flow will show that you add back the depreciation number, right? All right, sir, over to you for your next one. We're doing three each, by the way. So
What are we going to do? So let's see. Are we doing local, overseas, local?
that anything you can do, crypto, you can do overseas stocks, you can do real estate. No, don't do
Oh,
real estate.
we're gonna have some fun then. So for crypto, I actually would like to actually choose crypto.
All
And
right, Which one you
And
watching? Which crypto you
funnily
watching?
enough, it is the stable coins that are there. But now this is going to be a bit expensive for people. Um, I am not invested in it.
We cannot buy Bitcoin, sir. We cannot buy Bitcoin.
Fair
That's
dis-
all
no, no, no,
$20
no.
million.
Yeah, fair disclaimer, I am not invested in this one. I have other friends who are
Well,
though.
it's a watch list, right?
But it still was on the watch list. Ethereum accordingly, just because
Ah, interesting. I've
the block, not because of the, and again, you know how you are aware of how I look on currencies and cryptocurrencies. It's not about meme coins and whatnot. It's about actual utility. So the truth is, a lot of Ethereum, in terms of that chain, is running other cryptocurrencies. That's the funniest thing about all of it. And they've been
yep,
Bitcoin
yep.
catches fire, and the other ones come behind. But it's not about that I'm focused on. I'm focused on the US legislations, the push that has been since the new administration took over, and it's been a very serious push to ensure that the United States, for whatever that sounds like, is the crypto capital of the world, as they call it. But more importantly, in terms of these types of currencies and with respect to decentralized finance, where nobody doesn't have any claim to lock down your institution. These transactions can happen at any point in time, 24 hours a day. They don't have to shut down
Yeah.
like other traditional cash markets, fiat markets. So, for instance, I'll use it. The Swift network only runs at a certain point in time. You can have your transactions going through every hour of the day, 24/7. Now, the price of Ethereum is a bit high indeed. But the funniest thing is that a short while ago, Ethereum had dropped all the way down into the low thousand eight, 1,005. I think it had made its way back down. And now it's up at 3.7, double over. The thing about it is that I just love to impart to most persons is that number one, crypto will be for the foreseeable future in general extremely volatile. It was that way from the start. I got into it in 2015, like really got into it.
Yeah,
I
something in
made my
7.
right. My initial investment was XRP. Sadly, I sold, took my profit, and then come back in,
What?
and now XRP is at $3.52. So
I
I'd
bought
say
XRP at 40 cents. I've been waiting forever for that one.
exactly. Well, you are up significantly because at $3.52, you have a big thing. I mean, I went in low, and I got for me personally a good amount. I am now holding another particular coin, and I will not put it here, but I'm holding a particular one that is tied very closely to. No, that's too much information.
Yeah,
I'm holding
don't say it,
another
don't say it,
one
please. Don't say it,
that
don't say
is
it.
tied,
Message
and
me, but don't
yeah,
say it.
and it has a significant, I believe in its significant use case in terms of what it's supposed to do, in terms of its overall use case for the technology that it is connected to accordingly. Now, when I sold my XRP, I bought a significant number of that particular coin, and I'm once again just waiting for it to catch fire. Will it catch fire?
You
I,
talking?
huh?
You talking?
No.
Okay, okay. So here's the thing. I need to find my crypto wallet
Yeah,
because I bought I bought Ethereum from 450. So I have how much did I buy? I bought some, sold some. I know I have at least two. I'll need to check. So I'm up a a good
significantly.
chunk, a good chunk.
Not
But
even in
you're
the money terms,
yeah,
but you're in the unicorn type 1,000%. And that's the thing. You see, that's the thing though I love about blockchain, crypto. But there's another side to that's coming on stream. If and yeah, I'm gonna load them up right now. If the GSE can just get this right.
Stop it.
Tokenized coins,
Stop it.
because that's the
Stop it.
next discussion that I keep seeing popping up now. On the US side, they are talking about, as a matter of fact, JP Morgan Chase, the big players, the market is about to go commercial, and they're talking about tokenization. We just, if you've been keeping in abreast of the news, Robinhood literally just tried to, what was it? They tried to
For,
tokenize.
for the
It was
Jamaica
open
Stock
AI,
Exchange, for the Jamaica Stock Exchange,
the Jamaican,
cryptocurrency. Nah.
not cryptocurrencies. It was tokenization. Do you remember that years ago
Yes,
when
I do.
we were going to, right? So let's remind everybody that they had a thought process that we could tokenize things like real estate or companies accordingly. It has so much prospect, and
Yeah.
it is actually happening in the United States right now. They are literally,
Which means we're probably 20 years behind. So talk to me in 2050. We'll see.
when the horse has fully gone through the cart, running the race, and we now trying to catch up. Nah, it's okay.
That's kind of what we do, Chike. That's so, sir. Even with AI adoption, you know how late we are to the whole
I know,
thing.
I know.
So I mean, I'll just say, so I love Ethereum as a pick. I've always thought, and I think that Bitcoin has absolutely no function, nothing. Like
No,
it's
but
completely.
it is the purest. It is the purest decentralized
I
blockchain.
understand that, but it
Ghana.
has no no application. I can't do anything with it. So I'm seeing stories of, oh, 50 Cent sold the album for 5 Bitcoin a few years ago. Now it's worth X. The more it increases in value, people aren't going to use it for anything. Now it's supposed to be a store of value.
Yeah.
What is going to happen is that, and I don't know how much volumes are moving. What I think is this, and I was saying this before. So the institution, so people created Bitcoin was created to move away from fiat because it's
Yeah.
this, it's that. I don't know if you noticed this or would agree with me. The same persons we created Bitcoin to move away from are now taking ownership in Bitcoin.
That's what I said. In heavy volumes, indeed.
So what do you think is going to happen to Bitcoin when all the institutions are now in Bitcoin, and it's now regulated, and it's now controlling the flow of movement, and it's now capped? Because eventually what is going to happen is that they're going to have price control just the same way as you have price control for fiat currency. That's what's going to happen. So to me, everybody seems to be interested in Bitcoin, sure, but at some point when the market becomes more mature, no, it could very well be that by the time we get to that point, Bitcoin is 500K, everybody is millionaires. That will cause another problem, of course, because if everybody is wealthy, then essentially the wealth remains the same, if you understand what I'm saying. So
if everybody's super, nobody is.
exactly. So if everybody is wealth balloons because of this, the institutions, the previously wealthy will still have the same power, because even if Bitcoin is worth 500K and you have what, 0.1, because the truth is the persons who have most of the Bitcoin not letting them go. So
Exactly.
the persons who have it are already wealthy. The price is being driven up. I'm guessing mostly by the fractional purchases and not the whole, right? You're not gonna see anybody with an institution buying like 10 or 100 or whatever. So I said all of that to say, I've always thought Ethereum is just better. It's not the most efficient anymore. There have been others that have kind of come in, but most of the practical applications for crypto has been Ethereum and the other ones. To me, Bitcoin is just the flashy person who goes in front, and then everybody else comes in and does the actual work, if that makes sense. So I'm not selling my Ethereum anytime soon.
I think
Yeah.
each of them, again, I would, and as we always say, do your homework. And now everybody knows. My thing is about utility, is about that white paper, is about what it is used for. So, and the thing is, honestly, it's time, and you really do have to be able to, unless you're a trader. And traders definitely, in my opinion, I might be bludgeoned for this, but not Bitcoin, sorry, crypto trading is literally just as bad as, or volatile, I
If
should say,
you
as
want, if
or-
you want to have an emotional roller coaster, trade
yeah, man.
crypto.
Go
If you
crypto.
want to know what that feels like, and the truth is, it's a lot more stable now than it used to be. When I just started, when you and I just started, you would literally go from whatever it is down 90% like the next day or 2 days. It's not really doing that anymore. It's a lot more.
Yes, a
It's a
little more. It started to taper off indeed. You know?
demand.
Yeah.
Yeah. So let me do my next one here. I didn't know we're
Hold on,
doing.
wait. Well, hold on. We wanted someone, Sherry asked a little bit more of, she wanted me to just explain tokenization.
Yeah.
Um,
Let me
a
give
little
you the
bit.
floor.
So basically, tokenization, if I was to give you a comparison to what you can put it to, is similar to buying a stock unit. Well, what we're doing instead now is we're taking the same company and the same stock of itself, so whatever the stock price is, and we are creating a digital token of it on the market. So for instance, again, I used and there's a story about um, Robinhood tokenizing or trying to tokenize Open AI, basically. And there was it Open AI? I don't want to be, because I made the first mistake with Una the first time. Let me just double check what was. Let me see if I can find it quickly. Um, and I'll give you the best example. So, right. So, what they want to do is tokenize stocks basically for trading. So, they want to tokenize US public companies for their European customers. That's what they're trying to do. They're offering that right now. And the token basically is supposed to be a one to one of the stock. Right? Now, it would mean that Robinhood or some institution that they are working together with has to have custody of the actual stock itself, right? So they have to have custody of units accordingly that they are able to offer in a token, because you have to maintain that one-to-one value accordingly, right? So tokenization, though, has been explored in a broad range where you could literally think about it as a way of digital verification that you own something. So, for instance, the whole craze, if you are aware, that is, of the whole craze of people selling art, and it was NFT, which is called non-fungible tokens of itself. And they had this big craze for, millions of dollars, like a ton of money. And people lost their last stuff, and now they're holding these digital images that, yeah, they're not really worth much. Tokenization is in that manner being able to put a digital value or digital verification against something that is physical. So it's a stock, it is your home or a home, it is art, it could be a Ferrari, like a car or something. So instead of me, say for instance, I'm a wealthy person and I buy a Ferrari. This is a one of a kind Ferrari. It's gonna be held in a museum for the next 3 years. But the only way that I can prove that I own it and that I own it is that I have the digital token. So that's how tokenization is being envisioned for the future. That the physical things that we own, we can turn them into digitally verified um, placeholders. Well, that's the best word I can use right about now. So you can say that you can present it as like you would present a certificate. In the old days, you used to present certificates for your stock. Well, no, you don't really do that. So the token is a digital certificate in that manner to say, I own this particular piece of company or this particular real estate or whatever it is, whatever the investment is. Hope that helps.
All right, thanks for that. Yeah. So, Mon Cherie, let us know if that helps. Probably want to take some comments. We've been going at this for a while. So the last comment, I think, let me call out some of these picks. Massey, Cygnus, Transjamaica on the watch list for Spence, Rory, Kingston Property AP. I haven't seen the prox. I'm not gonna consider something until I see the prospectus. I'm not just gonna. It's not automatic for me. Fesco, JBG, NCB, Transjamaica. No comment on that one. Simone is saying the market is in shambles. Which market? Are you talking about the Jamaican market? I don't agree with that. Tavares says NCB, RPL, Wigton, Atlantic Hardware, and Jamaica Broilers. Now, I have a few thoughts on Jamaica Broilers. I'm going to reserve that for a video. But yeah, because we're going to need time to talk about them. I'm watching Transjamaica because I want to see when they'll start charging for the new leg. It's Q3. They said it at the AGM. That's why you watch and attend the AGM. So it's coming up in Q3. So that's great news for them. And Dwayne says he's lost interest in the stock market.
Never do that. No,
why are you watching
you
about the stock market if you've lost interest in the stock market? That doesn't seem real to me. You understand? Like you've lost interest in the stock market, yet you're watching a video talking about the stock market. It means you're probably just sitting on the outside waiting for a reason to go back in, which is fine.
Exactly.
Yeah. Craig is saying, "Forgive me, I just came on. Any thoughts on NCB's future?" No comment.
No.
That's a Q3, Q4. Yes, correct. Thank you, sir. All right, so I'm up now, right?
Yeah.
All right, let me see.
You're going local, international, crypto, which one?
Man, I never planned for international. I want to do a separate international one.
Yeah, fair enough.
But I will let you do that if you want. But before I get there, what are your thoughts on the acquisition, Kingston Wharfs and Cargo Handlers?
Big. But big for me on that thought process. Everybody watched Kingston Wharfs. I went to Cargo Handlers.
I thought you would. Okay, say more. Go ahead.
Because again, the company acquiring is the one paying. So, money is coming out of their pocket. I went to Cargo Handlers to see the why of what was happening of that one. And I was pleasantly I was pleasantly impressed, or should I say intrigued. That's the word I want to use. Because, and I want to find it too, there was a specific thing that was mentioned about their revenue.
We're talking quarterly or the notice? What we're looking at?
Was it the notice? Let me see. Hold on a second. Let me see if it was. I think it was in the notice indeed. It wasn't in the, it was it in the notice?
All right, let me know. Check it out and let me know.
I'm checking it right now. So I just wanted to see because there was something specific that happened for them. And I was like, "Ooh, this is interesting." Because you and I have been talking about for a while back. We were talking about the Wharfs. And we're always aware that Jamaica has always envisioned themselves as a prime, as a hub. Right?
Yeah, we've been talking about it for years. From we used to meet in person.
Right. And we should have been from a long time ago, you know, balanced out everything that was going from Panama. We had a lot of opportunity as well too, in terms of what was going on, especially when Panama started to run out of water stuff and all that kind of be in position. But I'm not seeing it now. Maybe it was the notice. Bring up the notice. I think there was a specific thing that I saw them say to them. It wasn't on the Kingston Wharf side. It was like a footnote on the Kingston Wharf side, but it was more prominent on their side. And I was like, this is really interesting in terms of what they're doing. Because it's
I don't know if I saw anything on the notice that really spoke to.
wait, go back to the purchase of the shares, right? Okay, so stop right here. Hold on. Go back up. It's about this one. So the acquisition of the 27% of the stock units was made by investment purposes. The KW notes. All right. So it's okay. So here, Cargo Handlers is well positioned to both contribute to and benefit from the important national trends. Kingston Wharfs has been recognized as the leading multi-purpose terminal and logistics operator in the Caribbean. Kingston Wharfs values the opportunity to align with CHL. No, there's something specific. So this is Cargo Handlers Zone, or this is Kingston Wharfs? Which one?
Yeah, this is on cargo handlers. Isn't it gonna be the same notice?
Yeah. So hold on, scroll down a little bit. It's not about Kingston Wharfs. It's about Cargo Handlers. I'm trying to remember what I saw that day. It's about some strategic move that they made.
Maybe it's in their report.
I wish I prepared, and I do say I wish no, because the last report, this was May 14th. Let me see if it was in this.
This was period ending March, so this was in May.
Yeah, it wasn't in the notes or anything. It wouldn't have been in the reports. Let me see. Hold on a second. We're pleased to Yeah, maybe it wasn't the report. Hold on a second. Cheers. Resulting net profits. Dividend, despite improvement in bulk cargo, a mass reduction number of cruise vessels. Negativity. This was against the backdrop of this. There remains potential for weakening. Okay, right. That report. Bring up the last report. Bring up the last report and go to the MD&A. I want to see that.
Yeah, I'm there. It's a one pager.
Okay, yeah, it's a one pager. So, what the part of the MD&A that goes down to say, despite the improvement in bulk cargo tonnage passing through the port, a marked reduction in the number of cruise vessels home porting in Mobay this season negatively affected the results of both the stevedoring and baggage handling revenue streams. Fair enough, that's the negative part. And this was against the backdrop of less than optimal containerized cargo activity over the quarter, primarily because of the inconsistency in feeder vessel service traversing the coastwise into the port of Montego Bay. However, it was this part of the thing that caught me, that says there remains the potential for weakening of demand for shipping services over the short term, as shifting trade policies is creating uncertainty among trading partners. We are confident, however, that the perceived uncertainty will be short-lived, as the shipping industry's ability to adapt to disruptions while maintaining service continuity is quite remarkable. Yeah. Now, why did that stand out to me of itself? Number one, because I think in the news there was a couple of new container ships, like the car ships that were coming through. Then, of course, because we had the situation of the whole trade issues that are going on between United States and China, and the requirement for more ships to be made for the United States in US, etc., versus in China. In terms of global cargo and coming through in Jamaica, coming through the ports accordingly, I personally, in my opinion, because we watched the multiple times that we had global shipping prices rise exponentially. We had blockage of Suez, we had possible war. Blockage of Suez was the last one. We had COVID, blockage of Suez with the ship that was there. We had issues with China. We had, I know we have trade war, right? We have the Panama Canal blockade, possibly in terms of, China still has not given up the part to the United States, all that kind of stuff. But with every single time you have a potential for disruption, the prices for the use of ports and the view or requirement to find easily accessible ports bodes well for those areas that have accessible ports. So
Okay.
I looking on the long term and any kind of potential disruption that could happen, and in a positive light. So I walk every morning, and where I walk, I literally can look out in the bay and see at any point in time there's like at least 10, 12 different container ships that are either not just in the harbor or in a combined state. You can see them in the sea as well too. For me, things like that bodes well in terms of as Jamaica pushes forward, you know, they expand, cargo handlers expand accordingly. So take in more, right?
Well,
And for me personally, Kingston Wharfs deciding to deepen their holdings in it can only signal that they have an end play, that they see something like that on the horizon as well for the long play. So
Yeah,
that's
man.
that's
That's what you see. And I liked Kingston Wharfs from last year. I think coming into this year, they were a stock to watch for me. When I watched their AGM last year, saw their expansion plans, they would have invested a lot in developing their infrastructure. I think they bought a new location and built it out, and they're creating more space. Loved their presentation at their AGM, by the way. I was supposed to be interviewing the CEO. I think Mark Williams is his name. I got his number. I need to just call him and have him on, because I think this now would make an interesting conversation to just get the full vision. But if you watch their last AGM, it's on their YouTube channel. They've always aired their AGM, by the way, which is excellent. They do excellent presentations, well run. Jeffrey Hall is on the board, which is on a couple of boards as well. So I was kind of following the Jeffrey Hall rabbit hole, and I came up on the fact that he served on their board as well. So I see it as a strategic play. The stock to watch for me here is Kingston Wharf still, only because the acquisition, though they're the ones spending the money, they're making an investment. Again, I see as an infrastructure play, and they're going to essentially just be further kind of like taking territory pretty much to expand what they're able to provide. And I know they say in the statement that they don't plan to do much in terms of they're not going to go for more stake. I think
yeah.
if the price is right, if the timing is right, they may very well do that. And so, yeah, that would be yeah. Go ahead.
For me on the other side, the next reason I picked Kingston, picked Cargo is price difference. So Kingston Wharves is at 30 odd.
Yeah,
Yeah.
that's
I'm
smart.
sorry, you know that we've had this discussion that you can stretch further based on, and there's an alignment, right? There's a marriage, it's already a marriage that is there. Kingston is at 31, whereas Cargo Handlers is at 10, 11 basically, right? And that was over the 6 month period. They've literally stayed within that band of, what is
Which
this
is
now? The lowest that's
why
9
it's
to
a good
10.
opportunity. Which is why I got it. It's a
Exactly,
good opportunity. Yeah.
exactly. So for me, I was looking on the play being entry in that I could get more. No, the truth
Because Kingston
is
Wharfs
yes,
before the
Kingston War
pandemic was a $55, $56 stock, if I'm not mistaken.
exactly. exactly. So going
Or
with
maybe
going with
maybe I
and,
mixed up
and
with
cargo
Panjam.
right
Maybe I
and
mixed it.
cargo handlers pay dividends as well too. Let us also establish the cargo handlers pays dividends as well too. So I mean $10, a $10 entry, $11 entry for the foreseeable future now. So again, I'm not going for short. It could happen. It could happen today. It could happen. We do not know. But in a long foreseeable long term trajectory, you will get the dividends. You have the potential of everything in terms of increased cargo that passes through them accordingly. Um,
Yeah,
that's
Kingston
just,
Wharfs
that's
has
just
been as high as $76 in the last 10 years. So
exactly.
it's
And we
it's more
and
than
we
50% though.
and we spoke about that. We spoke about the persons who basically bought at that was the price of um the persons who are holding a loss. If they decide that boy they can't stomach this no more, and they get jittery, there's no going to be this run up, and you're gonna have these ceilings that keep getting farmed when blocks start being sold because people want to exit as fast as they can. Versus a cargo handlers in which when you look at where they're coming from in terms of all how was the lowest that they have been,
Wow. In
right?
2005 it was $5. So 20 years ago it was $5. Up it's up 600% in 20 years.
Well, and
Well,
yes, if you
it's a
got
more
out,
than
if you
84%.
got out at the high, I mean, if you bought at that low point before it popped up, then you're still good. But if you bought anywhere between that rise above 25,
That's
which is
like
weird,
that's like, but if you bought Fesco at 849, just saying.
exactly, right? So
If
I
you bought
mean,
a certain company above $200, just saying.
exactly. And you have to be, and as an investor, you have to be aware. As an investor entering a particular stock, you need to be aware of what the high point price was. Because again, the moment you buy at the low, think you're buying on the low, then does it have the trajectory to run and to really climb? Because you have to now weed out all of the people that have been holding on to losses. Because as you like to say, Jeremy, for somebody to buy, somebody has to sell, and vice versa. So you have to be aware of who is looking to get off the boat, no pun intended, around them in terms of what's been going on. So Kingston Wars, yes, has a potential, but for me, and the play would have been cargo handlers because of the lower price point, and more than likely because people might not have been hooking up some losses from the high point accordingly. But that's just me. That's how I look at it and why I would choose. So and why they're on my watch list of itself.
I mean, I would say so they have um 87% of the shares in top 10, right? So to me the I was having this conversation with somebody yesterday. Um that you don't really see a lot of retail investors in these type of companies, right?
Mm-hmm.
Um, which says to me that the shareholders in it are likely to be those holding for a while, right? So I don't really expect a lot of volatility per se for companies like this. I may be wrong because they said I have 5,600 shareholders. Um, so I mean, yeah, we'll talk about this. I'm trying to wrap the episode in 2 hours.
Yeah, I know. See,
Go with your third one. Go with your third one. But there's this point here by try and see. Cargo handlers owns 30% of buying house cement as well. What if they do an IPO? Increased value could be created here as well as driving the company's profitability. Yeah, I see you. I see you. I haven't looked at cargo handlers. I'm more familiar with Kingston Wharfs. But as you said, Chike, it may make sense to look at this company here because again, if there is an IPO, for example, that would bode well for Kingston Wharfs as well. Now that they're owners.
Holding that
If,
percentage, yeah.
if you give out 20% of the shares, those shares drive up in price. Price goes up for everybody in terms of percentage gains. Who knows? Right.
Yeah.
So your third, sir, third and final.
All right, I'm gonna leave yours because everybody beating it in the comments, and if that's your third, then that's fine. If it's not,
It's not Trans Jamaica. It is not Trans Jamaica.
oh, it's interesting. All right, well, this is not on my list, but as a long term play, it's on my
Well,
list. It's not in my
it's not
portfolio.
what you mean it's not on the list. Okay, you're
It's
not
on
holding.
my list. It's not in my portfolio,
Okay, thank you.
and it's only because I have been diverted to A, overseas stock, B, crypto as well too. But we actually mentioned it a short while ago, and not because of the APO, and that is Kingston Properties.
Ah, interesting.
That
Okay.
is so Kevin, and fair disclaimer, I mean, I followed Kevin since when he took over. I've seen him a couple of times, know him enough to say to have a good talk with him and say hi. And I've always complimented him on his direction of this company. It has been just wheel, rubber to the road, strategic, measured investments.
And well-run company for sure.
Exactly. I every time I see him, I let him know this. I, and they haven't moved away from that. They do very measured
And
investments.
they haven't pivoted. They're focused on the core business.
Exactly. It's beautiful. It's genuinely beautiful to see. And additionally, too, if we want to talk about like, because nobody likes it, apparently, since we say the APO thing is like boogeyman word, whatever. The truth about it is that that company is still giving value, still gives you dividends, just solid leadership, right? That's just carried it forward. So I'm excited to see what they do, even going forward, because when they had the last acquisition and coming out of that, they were still in a positive light. They know exactly where it seems like they found that they know where to look, right? They do their homework. They really do their homework. Now the stock has stayed flat for a decent while now, accordingly. Well, early March it was at 770 and has gone up, but technically stayed very flat for the most part since March accordingly. But my thought process on that is they are more for me a very solid and stable company in terms of management specifically, and then that translates into how they have been handling their financials accordingly. You see them just plodding along. They might have a loss accordingly, but it's because of the environment. They explain it accordingly, and they just keep telling you we're not moving away from our core. Now you take a look on Caprit, and you look on their cash flow for the last report that they gave. Their cash flow from operations, and specifically their net cash from overall operations jumped from 400 and let us establish this is US dollars, 491,886 US to 1.19 billion in net cash for operations. Their working capital operating profit, so before that, moved from 681,000 to 900,000. And they just manage their cash accordingly. They deploy it, they let it go in terms of making their investments, paying down their debts, etc. I mean, I just have to respect them. I just have to respect Kevin and his team in terms of
So
what.
so the, so any and the how do you treat the prospect of an APO? Meaning likely they're raising capital to complete their acquisition. I don't know if that's why they're doing it. Um So does that change anything for you? Are you so when I think about a company doing an APO, I usually look to see how many shares are being issued, what impact that will have in terms of EPS growth, especially if it's a dividend paying company. More shares mean less dividend per share, essentially.
Right.
So does that factor into your consideration at all here?
Well, unfortunately, I'm going to say that because I am not in it, right? If I step in um, prior to the APO, then the things I'm looking on is, as you rightfully say, in one word, summing it up. How do I get diluted? How much do I get diluted? Right? Do I end up on the receiving end of the stick? Not favorable to me. Outside of that, though, we've always spoken about this. That
I mean, they've also done a healthy share buyback in terms of they've had a balance of issuing shares, buying back shares, etc.
exactly, and it has always been said as well too. So Buffett, let's go with those. My, how we look on that of my long-term mentor. Well, not mentor, sorry, but well, yes, he is my mentor. He just doesn't know it.
Yeah.
But a company doing a share buyback within good reasons, within a good reason to do a share buyback. So again, not because they just want the price to run, but because they are heavily capitalized to the point where they can't see no good reason to deploy it somewhere else, right? So there's no property that they find lucrative enough to want to buy. Let's deal with Kingston property now itself. They don't see anything lucrative right now. Property prices are too high around the world. Funnily enough, on that property price thing, the United States is actually going through a current shift, and I'm very keen to see what they do. Now they have their stuff in the UK, Cayman, Jamaica, and they've in Jamaica
I
too.
think I have something in the US. There's something that
Right,
we did an earnings call with them last year. They mentioned, I don't remember the state, but they had invested in like some
right,
apartment homes. I don't remember
exactly.
exactly.
And currently, the housing situation so I was looking very recently. Don't quote me, but I do remember that Florida was actually in certain areas was coming down because they had too many housing developments going up, and people were basically putting their homes up on the market. So it started
Yeah,
to now become a buyer's market versus
may get some distressed
exactly.
property at the time. Yeah.
So dependent on there and other states, not just
Also,
Florida, but
could also
depending on how.
inform.
Yeah, I would love to
Yeah.
see. I'm keen to see what they do with that, because they do have the ability to do stuff.
Yeah, they have
So
1.3 million in cash US.
right,
So yeah.
right. So
Okay.
they always deploy it. They deploy their money. They put their money to work. Look at the investment that as we look on their balance sheet, solid in terms of the investment properties. And there's balance with the real estate fund and so forth. But they do what they say they are setting out to do. They stick with it, and they clearly have a solid model of how they research and enter it. So I mean, from that position, if we come back to APO, if I entered, then immediately I buy more at the APO, and then just be happy with my dividends accordingly. But we don't put all our eggs in one basket, so that would be just one of multiple. We don't need to have many baskets, though. I should say, many stock, but at the same time, are many types of equity. Our securities actually in general. Securities is everything, whether it be crypto, whether it be bonds, etc. But everything must serve a purpose. So you must know why you're getting into it. And again,
Agreed.
you're getting an APO price. It is at X. It comes without having to pay certain taxes and fees and all that kind of stuff. It's an opportunity. If you see it as an opportunity, step in and buy. If you're having a long-term trajectory, you have seen the company put out units, buy back units. A share buyback means we're playing the supply demand game. Assess it according to what your viewpoint is in terms of your reason why you want to hold that security, that equity in your portfolio, and not just because of what the market says. Because at the end of the day, too, a company that's paying dividends, you can't look on them and say, "Oh, you buy the APO and it's going to last. As long as you're getting solid dividends every single time, you're getting income, right? So it's an opportunity. Go down a little bit more, you get the ability to get more of the units that you might not have been able to buy at the APO or so forth, or before that, right? And you're still getting dividends. So assess the company for what you need it to do for you. Kind of tune out the noise, and yeah, do your homework.
Okay. All right, so I'm torn about my last one. I'm gonna keep this short. So I will use a disclaimer here in that I've never been able to reconcile this company's business model, right? I feel like they're going in the opposite direction in 2025. But I'm intrigued. I said the company is Fontana. I'm
Oh,
intrigued because of the acquisition, meaning I am not a shareholder. I haven't been a shareholder for a while. I am curious to see. So here's my take on Fontana. I've said this on this platform before. Whereas companies take an approach to go to digital, to go to diversification of how they gain revenues. Fontana seems to be in the real estate business because they
this
keep buying
still in the brick and mortar.
Yeah, so
Brick and mortar.
it doesn't make sense to me. It doesn't make sense. No, I mean, end up being wrong, and you have all of these properties. Because if real estate values go up, they'll be sitting on a lot of real estate, sure, but that's not liquid cash either, right? And it's not like they're renting these properties. These are, because I think they borrowed what, like 900 odd million. They did something earlier this year, I think, from Scotia to pay for the Monarch acquisition. So
By the way, that's open. The sovereign one is open.
yeah, man, I think all of them are open now, which is why it's back on my watch list now. Meaning, I'm waiting to see. So I'm not a shareholder. Don't plan to be a shareholder. I'm looking to see if the strategy will bear fruit, because I am struggling to see it. I may be wrong, but this is me watching it because I'm looking to see if it's a sustainable model.
Well, here. Let me challenge well, not challenge, but jump in quickly because
Yeah.
you're on the page. So scroll down a little bit and let us see where you might be going. So stop right there.
Here's the
Stop
thing.
right there.
They have a seasonal business, right? So
Right. Do you see what their earnings look like as of 2025? Of Q2, Q3, and we're waiting for Q4 to come up accordingly, right?
I think their financial year is third quarter ended March. So their Q1 starts in, I think, July. So they're
Right.
about, yeah, so their Q4 numbers will come out in
Right.
August.
Also, look on the fact that their dividend has also improved and stayed stable, right?
Improved. Okay.
Go back.
Improved.
Go up.
Sure,
Okay.
it has improved. It has improved. Hold on. It has improved. It has improved.
Okay. Because is one dividend you're getting per year, you move from 10 to an additional 10 cents, depending on the number of shares.
From 8 cents. So their dividend that is has increased 300%.
Exactly. So
All right, Warren
I
Buffett.
would, if you were to chart it, right? If I was to chart that now and put it there, technically, both on the earning side and on the dividend side, that would be looking like solid upward trajectory, or at least stable trajectory on the earnings side. So for me, I mean, I do have the concern indeed as well too, as you say, brick and mortar, real estate. But they've made some good stuff. Let's see how, like the Fenty line, they're the ones running that. Let's see how that goes in terms of,
Okay.
I mean, and there's no question about it. Come, as you said, it's seasonal, Christmas time, etc. We all in Fontana. everybody's in either Waterloo store, Barbican, or over in Portmore or something. And now they have more stores. Now they have more
They have
locations.
cash, they have nice accumulated surplus. I mean, clearly the model is working for them, right?
Yeah,
But I
don't move
just
away from the rocks.
can't fathom like I would be doubling down on digital. I would be expanding to. I'd love to see a Fontana in Bahamas, a Fontana in Cayman Islands, a Fontana in Trinidad. Like those are the things maybe that I'd like to see. Um,
Yeah, regional expansion.
if they said to me, if they said, for example, they're partnering with Rihanna for the Fenty brand, and they're gonna partner with Rihanna to do Fenty stores all across the Caribbean or in Guyana, like awesome. But I think at some point, because there's a reason why a company like Monarch, for example, it it pretty much died down over time because at some point, because remember two things are at play here, and I know it's my pick, and it's like I'm talking myself out of my own pick here. But as things open up for persons to purchase online, they're moving away, right? So imagine 5 years from now, we would expect more people to be purchasing online than are purchasing in person. When you have all that infrastructure that you can't repurpose, what will that become? Now, a lot of people may have, I'm finding more and more persons may be looking for kind of in-person experiences coming out of the pandemic. I think that will kind of normalize over time, meaning you already see where main event kind of had a spike when the pandemic was done, when everybody went back outside because everybody was like, hey, I've been home for 2 years, I want to go out. They've
Mhm.
started to correct again because persons are like, well, I'm kind of tired of events now, I want to go back to my house. I want to go back to what I was doing before the pandemic. um so that's my concern long term. That's a concern long term for me, right? But I think if they can make it work, those strategic locations, give it new life, because they're excellent with branding, excellent with marketing. I
Yeah.
remember Julian saying a couple of years ago that they provide an experience for their customers. So going to Fontana is an experience.
Yes, it is.
I would, if they would if it does well for them and they come up with like a 40-cent dividend, I may have to rethink being a shareholder because that would be lovely, right? But um,
And 40 cents at eight. What was it? $8? Yeah,
uh-huh.
that is.
What's that yield, sir? What's that yield?
Let's go 850. Well, if you were able to collect it at
I think
850.
it's at like 890. The 886.
So
Yeah,
it's a 4.7% yield. And we normally talk about stable in
that
terms of
that's not bad.
inflation,
That's not
exactly,
bad.
inflation,
That's not
and
bad.
worse, if for some reason it gets driven down and it reached down at 7 and a 40 cent
Listen,
dividend.
the lower the price, the more attractive the dividend. So,
Exactly, exactly, exactly.
but I can't. I mean, these are the kind of conversations we used to have, right? So you see me go through this, and then I eventually probably end up buying the company anyway because maybe it will work out. But I don't know. I just I it drives me crazy that they're doing that because I'm a tech guy. I love, or maybe if they were doing both at the same time, it's like traditional.
That's a good catch. Yes, indeed. If they had balanced both, like so they drive like certain things would drive you to the store, but you could also get it fully in that way online as well. But they
Because
do have
two or 3 years ago they were focused on e-commerce, but I don't hear anything about that anymore.
Mm,
Remember,
mm.
they were launching their e-commerce platform and so on and so. We don't hear anything about that anymore.
Yeah, it was a nice to have at the time.
Yeah.
I know it's technically gone, but I mean the main things about, well, I mean, if I'm on the site right about now, you can get certain things there. There are different they have their categories, their deals and rewards and gifts and stuff like that. So I mean, I don't own Fontana, but fair disclaimer, I have my Fontana card, and I am ever so often, inside there for something or the other, according, especially upstairs, at the Waterloo branch, accordingly. So, I mean, it's there. But funny enough, when it comes to Fontana, I favor going into the store more than buying something online, But
I mean, I think we have our Fontana card as well. I mean, I just like to. I love when costs are low, but as I said, they may just very well be in the real estate business as well. And yeah, we'll see, right? But those are the three. So what any final thoughts as we close out? I'm sure persons are gonna say, it's good to see you. I don't know when we'll see Chike again, by the way. He's an entrepreneur now, full-time entrepreneur. So that's why you even see him so relaxed.
yeah.
In a
Wait, is that
rush.
as a full-time entrepreneur, you end up being relaxed? I know this is normally the other way, but we give
No,
God the glory. That it has
it
been very
depends.
good.
It depends on the field you're in. It depends on the field you're in. Because
Actually.
um, I find tech entrepreneurs, especially in the consulting space, you can pretty much you set your hours, you set your prices, you probably
Mhm.
make the same, if not more, than what you were making 9 to 5. It's a sweet deal.
And you
I,
give,
I,
you give
I know somebody in tech right now doing some 20, 30 million a year. It's good. So tech
uh,
space is good. There's a lot of
get it.
money.
That's what CNV Consulting needs to be. I mean, it's only 1 year. It's only 1 year into the company, and coming up on 2 years of consultancy. But it's been good to focus. I've gotten back to my core joy and love of providing that value and to more persons. So, but
Yeah.
on note though, it's actually a positive that I'll be able to join you a bit more if I'm being very honest, because I've missed this actually. I genuinely have missed, stocks to now as to if I'm getting back into the level of calculations that I used to do before, I don't have to anymore. I'm sorry,
I've always said to
I'm
you
going
that
to
it's not necessary
you've
for all.
already know, because you've seen some of the reports. I'm going to generate it via AI and just validate. And the AI reports are solid based on how they can research. Both local companies and overseas as well. To buy it.
So
Let
what
me make that clearly known.
what I wanted to do, and if you remember the last conversation we had about this, I wanted to go into so we want to move away from just investing and just JC. There are things that I want to talk about on this channel that I haven't, me alone, it's hard for me to do it. So, and I've said this to you before, maybe you can take some of the shows, for example, if you're talking about crypto one day, you're talking about the US markets, because that way our community can have something to look forward to, and we can divide and conquer. So I do content, you do content, Renee does content, we made some that overlap, and that way you just each person kind of covers their space. That was the vision we had when
Yeah,
when
that
we
was it.
used to talk about this 5, 6 years ago. If guys, just for full disclosure here, Cheek and I used to talk about the future of Learn Grow Invest, the 20-year plan, the 25-year plan, and he was supposed to be one of like a become a co-founder essentially at one point. Then he's like, I can't bother with you guys, doing anything. Um,
That's not
it
what
would it would have been good to have shares in LGI now. If you had said yes to that, you could have been. We have a million shares outstanding now. I mean, a third of that could have been yours, right? Um, but think about it and let me know, because I'm sure the audience, there's somebody in our Kajabi community, Maurice, he's been asking for crypto content. I know you follow that space a lot, so if you want to like jump on, do an episode, I can make you an admin for StreamYard. You just go live and then you talk about that. You can choose the day, you can choose the time, you can choose the length, all of that stuff. So that we can cover more, because investing is a very small, more people are investing in the US markets, especially in the Caribbean, than in the JSE. And the pool is small for the
Yeah.
JSE right now. It will change in the future, I'm sure. But if Trans Jamaica did that heavy push and just have 40,000 shareholders, I'm assuming that at least 20%, at least half of those, 20,000 of those are probably persons who probably aren't interested in content or social media or whatever. So that's 20,000. You take that down, if we get a subset of that, that pool is very small, right? But if we touch on real estate and crypto and the US markets and commodities, or trading, like technical analysis, just different things.
Yeah, which is genuinely where I actually did end up spreading out to, in terms of when I went to the US market,
You
focusing.
you were supposed to do a video on technical analysis. You think I've forgotten, sir?
Oh,
Remember, you said
we have to update the
said
video.
you were doing it, or the one that Andre did.
Yeah, we need an updated one for the use of the technologies that are in existence now. That's true actually. I mean, I'm not a trader, so let's make the disclaimer right now. But I use platforms that can be used for trading. So
Yeah.
I would be more than happy to throw that. As a matter of fact, no, I'm gonna commit to it actually. That I'm gonna figure out where I want to land. Crypto is I think crypto might be the easiest for me to, because it's natural for me to talk about it, because I'm literally following it every day. I'm not even invested in some of the finds, but it's just interesting to see the utility. And we can talk about it from the standpoint of legislation, especially in terms of what's going on with different companies and how, you know, the big boys that shunned it for years and now have trading floors. Like they're pushing out ETFs. JP
Yeah.
Morgan Chase is pushing out Wharfs, Bank of America is looking to do this, and the number of states that are making sure that they have Bitcoin reserves and all that kind of stuff there. It bodes well as it's never too late to get into something, because I still feel that crypto, for the wider markets, if you still look at the percentage, it's still not a lot of persons that hold it, because again,
Absolutely.
of
Absolutely.
who has accessed it, number one. Number two, understanding and the volatility of it. So yeah, I think I'll
Yeah.
commit to. I'm gonna commit definitively to just we'll just go around the place. I don't think we need a history lesson on crypto. Most people like to just know about what's going on or get to the nitty
Most
gritty.
persons just want to know what's happening currently. And here's the thing: you don't have to. It doesn't have to be a weekly thing. Like, just it's more about the commitment to be consistent, whatever consistency looks like for you. If it's once every 2 weeks or even once a month, it will still add up over time. And then, because I mean, the pace, the space is still going to be. I mean, it's not. There are some die-hard crypto persons in Jamaica,
I know that.
right? There are some. There are a few. So I think, and it's we don't. Our style has never been, the 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 flipping, the pursuing, the greed, and the meme coins. We're not going to touch on any of that stuff. That's not our style. But I think giving persons context around what's happening, sharing a perspective from our platform is important. So my personal plan, once things kind of stabilizes at Sagicor, where I know what my time will look like when my sons get older, when I know what that looks like, and when I finish school, because I finished school in October. So I have
Nice.
school Mondays and Thursdays now. So that will free up a lot of time for me to be able to do more content. And what I'm hoping to be able to do is have something to do with the local market, something to do with the overseas market, something to do with real estate, just being able to cover more of investing as a broad topic.
As a broad topic, yeah.
Yeah, man. Because I'll say this as well. Let me know if my audio chips out. Still can't hear me?
Very good. Yes.
Okay. Yeah. So what I want to touch on as well is actually the faith-based aspect of investing, right? More about investing styles and methodologies and mindset around like there's so many different things to cover, right? But that takes time to build out because we don't necessarily want to move away from what has built our audience to this point, because the 55 persons on right now are here to listen to stocks to watch for the JC. If we start to talk about other topics, it will take a while to build up. So we can't pivot and not, you know, nurture existing audience, right? Orville, I don't even remember the name of the platform I used to use, but I did it the old school way. I don't even know if it still works that
Full
way.
wallet, full storage.
Yes. So I have a wallet. I have this long key somewhere that I need to find. Listen, I need to sort this
Really,
out.
man. See, that's why. Well, so for Orville, I use Kraken. I Kraken.com has been. I have two exchanges, but my primary go-to is Kraken.com.
Use Binance.
German, and that's a online exchange.
Yeah.
I've had confidence in Kraken for years.
Yeah, man. Kraken Kraken
It's
is what I used to send money to Kraken,
right.
purchase BTC, send BTC to the exchange, then purchase the crypto that I want to buy. So we used to lose a lot of money in that conversion, by the way. But yeah, man. So all right. So thanks again, GK. Really
Pleasure.
enjoyed the conversation. Thanks a lot. So we'll talk soon.
All right, bro. All right, everyone. Take care. Bye.
All right, guys, this was a long episode. Brought me back in terms of old times. I really hope you appreciated it as much as I did. Just want to give you some updates before I close off. We have our portfolio makeover challenge that's coming up in 3 weeks. All right, portfolio makeover challenge is designed for you if the question that we get the most is, what stocks do I buy? When do I sell the stocks I have? How do I know which stocks to add to my portfolio? When do I rebalance? All of that stuff. So we have a 3-day portfolio makeover challenge, and it's gonna be within our community. And so we are looking forward to that. It's 3 weeks away. There are limited spaces, so you have to sign up as soon as possible. The link is in our community, but we're gonna do some marketing for it, I think, as early as next week. So just sharing that update here. We have our month-end call for the community, the general community call this Friday. That's why I'm happy we're doing this video now. And we have our challenge for this Saturday, which is financial analysis. So we're going to be digging into financial statements, how to read them, how to review them, what to look for. So that is coming up. And next month, August, is our book club in our community. So we have a book that we're reading now. Actually went to the book ship. I don't know if you guys have been to it yet, but I have some books here that I have bought that I will have a video that I go through. Because I'm reading each of them a little bit now to see, what I like, which ones I'll read all the way through. I'm reading this one now called True Riches. I found out about it online about a month ago. Then I saw the book. I thought I'd check it out. There's also this one I'm reading called Psychological Analysis. I think Chike would like this one. So this one is actually about futures trading, but it's more about the psychology of investing. So I'm gonna go through all of these books in another video, just what I like, what I don't like, what I've learned from it, etc. So that's what's been happening with us. Hope everybody is doing well. Feel free to join our community. The link is in the description or in our bio if you're on IG or any of those platforms. If you have any questions before I close off, just let me know before I close off the stream. Thanks again. I just know somebody's gonna say to me, Jeremy, this video is 2.5 hours long. I can't watch it. That's okay. That's completely okay. If you can't watch the whole video, that's fine. Watch it in stages, right? All right. All right, so Chike, Orville, you're both in the Telegram community. Just message each other, or just you can answer it there, Chike. Please continue the conversation there. Fesca is a solid company. Solid. So all right, guys, take care. Have a good evening. I'll see you again real soon.
Learning is the key to successful investing. And who doesn't want to invest in some way?
Here at L.E.A.R.N. Grow Invest, we focus on financial education, all with the aim of sharing our knowledge on personal finance, investing, and building wealth. We do this on the foundation of our faith in God.
If a more holistic approach is what you need, check out our Grow Faith-based financial coaching program.
Find out more about us at learngrowinvestclub.com
and follow us on all social media platforms at Learn, Grow, Invest.